Hey, how y'all doing? So in this video, we're going to be talking about ES in the price action from today. The day that I'm making this is the 23rd, 5/23, 2023. So I'm going to talk about a Persian revert setup that I saw on this morning. I posted it in my free Discord chat as well. So Persian revert, what do we need for a Persian revert setup? Well, let's think about the name, purge and revert. That means we want to see price purge a key liquidity pool and then revert in the opposing direction to take out or opposing liquidity. So this was a buying scenario, which means that we want to see it purge sell side liquidity and then revert within that range to take out buy side liquidity. Okay, so this is that key liquidity pool this morning. See right here, I'm going to mark the low of it because when we have a swing low level like this, we know what is resting beneath that level. Sell side liquidity, sell stops. So once we purge that sell side liquidity right there, price it's taking out sell stops, but it's also in what? It's also in a discount marketplace. It's in a discount marketplace. So what we're going to do next, because we took out those sell stops, what we want to do next is we want to measure this price range. So we're going to take the high of that price range from right here to the low of that purge. And what we're going to do is we're going to find 50% equilibrium of that price range, right? All right, let's note it right there just so we know where it's at. Okay, so we got 50% equilibrium on that price range. Anything below it, discount. Anything above it, premium, right? So now what we're going to do next is we're going to go to a lower time frame chart. Okay, why do we go to a lower time frame chart? What's the reason for that? We got to look for that lower time frame confirmation, that lower time frame shift in market structure. So now what I have displayed here is a 1 minute chart. Okay, so there's your 50% level just displayed on a 1 minute chart, and there is that major 4-hour liquidity pool now displayed on a 1 minute chart as well. So what we're going to take our focus to is 9:30 equity open. Okay, there are a couple times when we're dealing with indices, there are a couple times that you want to keep a close eye out for. All right, number one, 9:30 equity. So 9:30 is a very volatile period because if you look at the bottom of my chart, you see how this volume just perks up so much at 9:30. You want to keep your eyes, you want to keep your focus on the times where the volume is the most extreme. It's the most active. Okay. Another important time to keep an eye out for is 8:30. Why 8:30? Because that's when the news embargo lifts, okay? But days where there really is no major news before equity bell, then it's best just to wait on 9:30. If there's no major news release, there's no reason to even be looking before 9:30. So those are two very important times. And then obviously there's power hour. So really it's actually 2 to 4 is a really active period as well, 2 to 4 p.m. Eastern time. Okay, but what we're focusing on here specifically is equity bell. So what do we see happen here? Let's break down this little pocket of price action. If you look at my cursor, you look at this down close candle, this is where 9:30 was at. Okay, so boom, there's equity bell, price sells off. What do we call this? That is our Judas swing, or some people may call it a turtle soup. Okay, but in simplest terms, it is a fake run to take sell side liquidity. It's a fake run to take liquidity. That's all it is. Because think about this. If you are not privy to the higher time frame chart, if you are not privy to the fact that you are taking out a very, very large liquidity pool right now, if you are one of those traders, which many traders are, who only focus on a lower time frame chart, and you're looking at this 1 minute chart, you're seeing boom, it's getting beat up, it's getting beat up, it's getting beat up, it's getting beat up. And you're looking at this consistent downtrend coming into equity bell, and then equity bell, we're seeing this big leg lower right here. What do you think is going through the minds of many traders here? What are they thinking is going to take place here? They're thinking that this trend is going to continue because it looks very weak. It's consistently trending lower. It's just getting slaughtered. So most traders looking at that chart, okay, forget the right side of the chart has happened. Most traders looking at that chart are thinking this thing's going to continue going down. This is in a very strong downtrend. Look at this thing just getting destroyed. This is going to keep going lower. Now it's 9:30 equity bell, volume's picking up. Boom, the thing's going to get destroyed. Nope, it is sold off right into a large bucket of sell stops. Okay, and it purged, hence the name, purge and revert. It purged those sell stops. Now that it's purged those sell stops, what's the next objective for price? It's going to revert in the opposing direction to seek buy side liquidity. Okay, so this was our Judas swing to purge that low right there, to dig a little bit deeper into that 4 hour, and then boom, you get a nice big move to the upside. It reverted to that buy side. Following? So now that is what we call a shift in market structure. See that big, that huge, that explosive move higher, right? That is our shift in market structure. And another key thing you want to see with your shift in market structure is a fair value gap. 3 candles, there's your gap, fair value gap, right? So we got a fair value gap, we got a shift in market structure. We just took a huge liquidity pool. We purged that out of the marketplace. We got 50% equilibrium marked off, ready to go. What do we want next for an entry? Well, for an entry, we need price to pull back into a what? We need price to pull back into a discount marketplace. Right there, we have 50% equilibrium. At the point where price trades below 50% equilibrium, it enters what? It enters a discount marketplace. Discount means cheap. That's all it means. Discount is basically a fancy way of saying cheap. And premium is a fancy way of saying expensive, right? So you want to be buying price when it's in a discount marketplace if your bias is bullish. So as soon as it trades down into a discount, it's closed at fair value gap, you can buy it. That's a setup right there. That is a setup. Now, where would your stop? Where would your PT be on a setup like this? If we're entering right here, look at my cursor, look where it's moving. If we're entering right here, after that shift in market structure, after it's purchased liquidity, after it's got fair value, got confirmation, after we are fully aware of where equilibrium is at, where's stop? Where's PT? Well, your stop is going to be beneath this low. Why is it beneath this low? Well, for one, it's beneath the fair value gap. That's a good place for a stop, but also it is the low of that liquidity run. So that is a valid stop out point. Now, PT is going to vary because we all have, some are more aggressive than others. Some like to take profits quicker. There's no correct way to do that. If you want to be like, if you're an ultra scalper, you just want to get out, you want to take your money and just go enjoy your day. Like, this could be a good PT for you. That high right there, that's a valid PT. If you're a scalper, taking out that buy side liquidity above that high, that little liquidity pool, that's a valid PT. You wouldn't spend a lot of time in the play. You get your money and you're done. You're good. For a lot of people, they love that type of trading. There's nothing wrong with that. Say you want to be a little bit more aggressive. Well, we are in a discount until we trade above this level right here. This is at equilibrium. So we're actually in a discount. Even where we're trading right now, it's considered cheap. It's cheap right now. It's still cheap. It's just kind of consolidating at the moment, but it's cheap right now. And it's remaining cheap until it trades above 50% equilibrium. So knowing this information, what are some other good PTs? Well, we already talked about one on the 1 minute chart, but say you want to be a little bit more aggressive and you want to tag these buy stops. Right here, see this? We have a swing high right here, and we know what is resting above swing high levels. Buy side liquidity, buy stops. So that is a valid PT as well, and beautiful risk reward. Let's just go back to the 1 minute chart real quick. Let's see. So if you got in right there, you're risking the low, your profit target's at high, which has already been hit. Those buy stops right there. I mean, just at first glance, we can see that that is beautiful, amazing risk reward on that play. So that is a valid PT. And lastly, the last valid PT would be right here. This is like once we enter a premium marketplace, there's equilibrium, and then we have this key liquidity pool in a premium marketplace with that fair value gap draw right above it as well. Valid PT and out of this world risk reward. Okay. So as you can see, there's different ways to play this, or you could just take partials on your way up. It really depends on how you want to do it, but that is the setup. I mean, that is just a picture perfect purge and revert, and just a really, really clean setup.